It was a bet for the ages in terms of Musk betting on Trump.
So we need to have a very serious talk about what the stock market is doing right now. Look at my portfolio, year to date, 94%, absolutely exploding. And the question that everybody's asking me, is this sustainable? Are we in a bubble or are we going to crash? So I'm going to play an interview of Dan Ives right now. He's going to break down what he sees in the stock market going forward for Tesla, Microsoft, and Google. Then we're going to do a deep dive into Tesla because you guys know I have a big holding in Tesla. I'm absolutely making a crap ton of money on it. But is Tesla a bubble right now? We're going to go through everything that you have to know. So here we go.
Nice to see you, man.
Great
Welcome.
to see you.
Should we be surprised at all at the fact that these stocks are once again surging? That they're hitting, in many cases, new highs almost every day?
I think it's get the popcorn out because it's just the start of what's going to be the AI revolution as the second, third, fourth derivatives play out. And me and you have talked about it. Trump administration in. That's a Goldilocks scenario for tech, deregulation from FTC to NHTSA and others. And that's why when you look at Tesla and others, the street now is just starting to realize I think how this plays out. And that's why I think over the next 12, 18 months, NASDAQ 25,000.
Okay, so that's what this is primarily about, the Trump administration being more friendly for tech. No surprise that you got a parade of CEOs down to Palm Beach, a pilgrimage, if you will, to talk to the president-elect.
I think there's two reasons. One, it's the multiplier. I mean, we've talked about for every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. So when you look at enterprise, when you look at software, you look at cybersecurity, other parts of infrastructure, I think now you're starting to see that trade spread out because it comes back to it's 10 p.m. in the AI party that goes to 4 a.m. Now behind the velvet ropes, Benioff and others are getting let into the party. But when you look what's happening from a deregulatory perspective in the Beltway, that's why this is setting up for what's going to be a golden era for AI. And now, from a deregulation perspective, FTC, whether it was deal making, NHTSA when it came to autonomous, now it's just getting started to what we view as really what's going to be just a unique, special moment.
You think that the cases that were either talked about or brought in the current regime of Washington, the White House, are they going to disappear? Are they not going to be as onerous as maybe you once thought? I mean, game that out for me because that still is an overhang.
Look, the Friday the 13th, whatever the worst horror movie, Nightmare on Elm Street, for tech stocks, has been Lina Khan, right? So with her gone from the FTC, I think 80 and 90% of what I'll say the overhang starts to get removed. DOJ and others, clearly, that's going to continue to play out when it comes to Alphabet, when it comes to Apple and others. But I think the antitrust, the concern, I think a lot of that starts to abate. But the biggest thing is, this is the beginning. Get the engines sort of roaring.
Who wins the most? Who wins the most?
Well, I think Microsoft is going to win the most in terms of from an M&A perspective, and they're going to get aggressive on M&A. I think you're going to see Alphabet and Amazon also continue to expand, not just from a cloud perspective, but when it comes to chips. And I continue to think the biggest winner in all of this, at the top of the mountain, is Musk and Tesla. They continue to be the biggest winner. It was a bet for the ages in terms of Musk betting on Trump.
So let me break that down. There's a lot in there I want to get to. First, Microsoft is your first answer as to who's going to benefit the most. What's going wrong with that stock? Well, why is it so dramatically underperformed all of the others? It hasn't hit a new high since the summer.
Yeah, I think the street is, and I think a little is happening with NVIDIA as well. I think they're underestimating just what this enterprise demand is going to look like when it comes to more and more. Only 45% workloads in the cloud today. As more and more of these AI use cases get launched, Microsoft's going to be a core beneficiary. I believe, Scott, we're sitting here a year from now, $4 trillion market cap. That's why Microsoft, along with Alphabet, continues to be table pounders when it comes to large cap tech.
Okay.
So Dan is super bullish on tech going forward, but this video right here, we're going to do a deep dive on Tesla. We're going to break down why it's overvalued or why it could be undervalued. I'm going to lay out a bunch of details for why you should buy the stock or why you should sell the stock. So let's look at this chart right here. I just want to start here first. So November 5th of 2021, Tesla was trading somewhere around 407 per share. 407 per share, and it went all the way down from 407 all the way to like 113. So the stock went down roughly 75% from peak to trough. Now, you can see right here, Tesla is absolutely pumping, but there is a key difference between right now and back then. So back here, Tesla was not really even close to having FSD being unsupervised. There's rumors that next year is probably going to come, I personally have a Tesla. I do feel like it's definitely possible. I think we're really close. We're not there yet, but I do think next year, 2025, we will see unsupervised FSD. Now, on top of that, in 2021, the Optimus robot really wasn't even a thing, so the market had no idea really about that and how to even price that in. So right now, what I'm trying to get at is the stock was 407 with lower earnings, lower revenue, FSD wasn't close, and the Optimus robot was not even on the horizon. So now if you go over here to the right, unsupervised FSD is on the horizon. The Optimus robot is on the horizon, but that's a little bit farther down the road, maybe like 5 years. So if you're just going to compare apples to apples, here versus here, what valuation is more justified? Definitely right now, this is more justified because back here we didn't have any of the things I just talked about. But right now, I feel like the market is looking forward a couple years and then bringing all those earnings back to right now and saying, okay, we're going to price this into the stock right now. So the thing about it is usually the market's forward looking by roughly like 1 year. But I feel like right now the market at this valuation level right here, 461, the market is looking forward roughly like 3 to 4 years in my opinion. So what does that mean? Like, is there a lot more money left to be made in Tesla? Potentially. But now let's dive into my 100% free alpha report. I just want to break this down for you guys. I went down into a little bit more detail. So, am I going to sell Tesla stock? So the market has been totally pumping hard the last few years and especially in the last few months. Since Trump got elected, him and Elon have pretty much been best buddies. And, the stock market is really valuing that partnership between Trump and Elon, and that's obviously getting priced into the stock. So my trading account, I'm up 96% in the last year to date. So I was at $995,000 yesterday when I sent out this alpha report. It's roughly around like 990 right now. It's bouncing around in real time. The market is open right now. So that bounces around like crazy. But making 96% in a year is not usually sustainable. A lot of these gains have come from Tesla, but it has a lot to do with how I position myself in 2022. So let's dive into that for just a little bit. So in 2022, the NASDAQ fell 34%. Everybody was freaking out. Everybody was selling. Everybody didn't know what to do, but I was buying calls. I was selling puts. I was buying more shares of companies that were trading undervalued. And when the market started to rebound right here, that is where all my buying through this low point right here, I capitalized on it. I initiated so many new long positions right here, and then bang, I capitalized on all this upside right here. I mean, a triple Q went from 266 to 536, so pretty much a double since the bottom of the 2023 market. That's the power of having conviction and knowing what valuation level things are trading at and to know if they're cheap or not, and to know when to use options to magnify your gains. And now my portfolio is exploding. I might hit $1 million by the end of the year. We'll see what happens. I do feel like we're a little bit overvalued, but we will see what happens. The market doesn't always have to be rational. There's a saying that the market could be irrational longer than you could be solvent. So keep that in mind when you go out there and shoot out some options trades. Just because you feel like something is overvalued, for example, and you go buy puts or you sell calls, that doesn't mean the market has to automatically correct lower just because you decided to say the market's overvalued. So keep that in mind. So this is my thought process on Tesla. And in my Schwab trading account, this is one of the trades that I made on Tesla. I also had some calls on Tesla that I bought and then I closed out. I made a bunch of money on those. And I also sold some puts on Tesla too. Let me pull it up right here and show you because the strike price is probably going to blow your mind. So you can see right here, Tesla, I sold the 170 put for $620 in 2025. I sold those puts for $30,000, $30,813. I'm up $28,000 on that play right now, and I could buy them back for $2,500. So that's the difference between this and that. So this is the power of making options trades when you have high conviction, when things are trading below intrinsic value. So Tesla, you can see right here on Schwab, I bought 500 shares and my cost basis is $149 per share. I'm currently up $313 per share, which is roughly $156,000. Now, the question is, I personally do feel like Tesla is a little bit overvalued. I'm gonna go into more details about this right here, but my issue is that if I go sell my shares of Tesla, these are all long-term capital gains. So I'm probably going to pay roughly 15% taxes on those capital gains. So if you just do 15% times $156,000, by me selling, I'm guaranteed to lock in roughly a $25,000 tax bill. So that is the debate. Do I sell right now, take my profits, and maybe buy Tesla lower if it takes a dip lower? That is a possibility. But when I bought my shares of Tesla, my wife and I, we talk about whenever I buy shares of really anything. I told her, the only way that I'm going to sell Tesla is when I come home and I have a robot sitting next to me doing my laundry, making me dinner, stuff like that. That is probably what we're going to do. We're probably never going to sell our Tesla shares until literally the full intrinsic value of the company is realized in the share price. Robotaxi's big, but I think that the Optimus robot is even way bigger, but it's just going to take a few more years for that to become closer and for that to get priced into the stock. I feel like the price of Tesla right now, it's not pricing in the Optimus robot, it's starting to price in full self-driving, unsupervised, and the Robotaxi network. So I'm probably going to hold my shares, but to be honest with you, I wouldn't be surprised if Tesla were to be down 50% from right now. I don't know what it's going to do. It could be up 50%, it could be down 50%. Nobody really knows, but let's do a valuation on it right now, and I'm just going to show you how expensive that I really think it is. So Tesla right now is trading at a 190 PE ratio. That's based on trailing 12 months earnings. So to calculate that, you just take the trailing 12 months earnings, you add it together, and then you divide it by the current share price. So that'll get you a PE ratio of 190. So what most people don't understand is they're going to say, oh, you're old school, you do PE ratios and stuff like that. Well, everybody's a genius right now, and if the market does take a correction, you will be happy that you understand how PE ratios work and just understand how things are over or undervalued, because Tesla could really fall hard, to be honest with you. So what a 190 PE ratio actually means is if somehow you had all the money in the world and you were to buy the entire company of Tesla outright, it would take you 190 years to get your initial investment back. So the market cap of Tesla right now is roughly like $1.4 trillion. So let's say you had $1.4 trillion just laying on the side and you want to buy Tesla, the whole company. It would take you 190 years on current earnings, and I get it that earnings are going to grow going forward, but on current earnings, it would take you 190 years for you to make $1.4, $1.3 trillion back in profits to get your initial investment back. So just think about that. And to put things in perspective, NVIDIA right now is roughly 55. Apple is 37, Microsoft is 40, and Google is in the 30s. And on top of that, NVIDIA is growing earnings and revenue at roughly 100% year over year. Tesla is not growing that fast. Elon guided on the last earnings call roughly a month ago that 2025 revenues are expected to grow by 30%. NVIDIA is growing revenue at 100% year over year, and the valuation level is roughly 1/4. So that's just putting it in perspective of how expensive Tesla really is right now. So it's pretty much like perfection being priced into the stock. If they don't hit on the perfection, or the stock just decides to take a dip, the stock could go way lower than what it is right now. So just keep that in mind before you buy into Tesla, that if you plan on buying and holding for at least 5 years. My 2030 price target is roughly $1,200. So the question is like, well, Brandon, why would you sell for $475 if you think it's going to go to $1,200? And my response is, I think it's going to go to $1,200 in 5 or 6 years. But right now, the valuation is not justified. So do I just sit on the shares and forget about it and ride out the volatility? Maybe a year from right now, it's going to be half the price, but then it's going to go up after that. Nobody really knows. And it's really hard to time the market. Nobody knows where the top or the bottom is going to be. And if I were to sell, that is a decision to time the market twice. So look at this right here. Let's just say that right now, this cycle right here is just over here. So if this is current, this is Tesla at the peak. Let's say I'm good enough to call the top. Let's say I sell right here. But now I have all this cash on the sidelines, or maybe I'll just go buy the S&P 500 or whatever I'll do with it. So now I have all this cash on the sidelines, and it's like, when do I buy back in? So maybe the stock does take a dip, and then maybe it pumps up right here, and I'm like, oh shoot, maybe I shouldn't have sold. But then it keeps falling down, and the question is going to be, when do I buy back in? I have to time the market on the top, and I have to time the market on the bottom. It doesn't have to be perfect timing when I sell and when I buy back in, but it is something to think about if you decide to sell something and you want to buy it back for cheaper. So long story short, what is the key takeaway from this video? If you want to buy Tesla, plan to hold it for the long run. Understand that it is very expensive right now. That doesn't mean you're not going to make money, but expect to just hold it for 5 years at a minimum if you want to buy it right now. If you don't want to hold it for 5 years, I don't recommend you buy into it. I think you're gambling. The stock is going crazy right now. You don't want to buy in when things are going crazy. You want to buy in when things are cheap. When I bought my Tesla shares at the beginning of last year, my cost basis, like I just said, was $145 or $148 per share. That is when the stock was in the dumps. Everybody was talking crap on Tesla, saying EVs are done. But that is when you want to buy into things. You want to buy into things when the sentiment is low, when the morale is low, when people are fearful. But right now, people are being greedy, and that's making me want to be fearful. I don't want to initiate any new long positions on Tesla right now. So I'm probably just going to let my shares ride. and we'll see what happens. I did sell cover calls on Tesla for 475 strike for this Friday, but I did roll that until next Friday. If you want to get my logic behind that, because it's actually a very smart move, I'm going to put a lot more money in my pocket if I end up going into money on those, because I went from a 475 strike to a 490 strike. So I'm basically going to be able to sell my shares for $15 per share more if they go into the money. So just think about that. Check out my Discord, check out all my links below, check out my course. All that stuff will help you guys out a lot. But if you don't want to do any of that stuff, watch this video right here. It's a basis of how I trade stock options. It'll really help you guys out. So I'll see you there.